A handful of companies are about to spend over $1 trillion building artificial intelligence. Here's the problem. The money AI actually makes barely exists yet. So the whole world is now asking one very expensive question. Are we living through the smartest bet in history or the biggest financial bubble of all time? Today, we follow the money into the AI boom and try to tell the difference. Let's start with the sheer scale of what's happening, because it's hard to overstate. The giants of tech, along with AI labs like OpenAI, are pouring hundreds of billions of dollars every single year into building AI. Enormous data centers, millions of specialized chips, power plants to feed them. To give you a sense of the numbers, OpenAI alone has reportedly signed deals worth around $1 trillion to secure computing power, while its actual revenue is a tiny fraction of that. And the company at the center of it all, the chip maker Nvidia, has become one of the most valuable companies on Earth, worth around $5 trillion. This is one of the fastest, largest waves of spending on a single technology in the history of capitalism. So why are they doing it? The bull case is genuinely exciting. The believers argue that AI is not just another gadget, it's a general-purpose technology, like electricity or the internet, something that will eventually touch every industry on the planet. And if that's true, then whoever builds the dominant AI stands to earn trillions. In a race that big, you can't afford to be cautious. You have to spend enormous sums now to avoid being left behind forever. The upside, they say, is almost limitless. But here's where the worry creeps in. Because the spending has raced miles ahead of the earning. Think about it. Hundreds of billions of dollars are going out the door. But the revenue AI is actually generating, the real profit from real customers, is only a small slice of that. In fact, one widely cited study found that the vast majority of companies experimenting with AI couldn't point to any measurable profit from it yet. The technology is astonishing. The business model that pays for it is still largely unproven, and that gap between money spent and money earned is exactly what every financial bubble is made of. Now, in 2026, that worry took a darker turn with something called circular financing. And once you see it, you can't unsee it. Here's how it works. Nvidia sells its chips to OpenAI. That's normal. But Nvidia has also agreed to invest staggering sums into OpenAI. Reportedly, a guarantee of around $250 billion for a single data center project and up to $350 billion in financing for chips. And what does OpenAI do with that money? It buys more Nvidia chips. Do you see the loop? Nvidia gives money to OpenAI, and OpenAI gives it right back to Nvidia. The same dollars circle between a handful of giant companies. From the outside, it can look like booming, unstoppable demand, but some of that demand is really just money cycling around inside a small club. One analyst summed up the danger perfectly. You buy from me, I invest in you, and everything's fine, unless one of us has a problem, in which case both of us have a problem. That's not just a business risk, it's systemic risk, and the markets noticed. When these deals came to light, Nvidia's stock dropped, and the cost to insure its debt against default spiked to a record. If this all feels familiar, it should, because every bubble rhymes. In the 1800s, it was railroads. A genuinely revolutionary technology attracted a tidal wave of investment that ran far ahead of the profits, and when reality caught up, countless investors were wiped out. In the year 2000, it was the dot-com boom. The internet was absolutely going to change the world, and the stock bubble around it still burst spectacularly, erasing trillions in value. That's the crucial lesson. The technology can be completely real, and the bubble can still pop. Both things can be true at once. The internet reshaped civilization, and a fortune was still lost betting on it too early. So what could actually prick the AI bubble? And here's where it connects to something we covered recently. The entire trillion-dollar spending spree rests on a single assumption, that the best AI requires colossal, hugely expensive computing power, so all that spending is justified. But what if it isn't? What if cheap, efficient, open models, like the ones coming out of China, can do 80 or 90% of the job for a tiny fraction of the cost? Then the case for spending $1 trillion on the biggest, most expensive systems suddenly looks a lot weaker, because the pin that pops a bubble is usually a simple, brutal realization. You didn't actually need to spend that much. Now, in fairness, let's steelman the other side, because it might not be a bubble at all. Unlike the dot-com companies, which often had no profits and no revenue, the leaders here are wildly, genuinely profitable. Nvidia earns some of the fattest margins in business history. These are cash machines, not paper dreams. And AI is genuinely useful and getting better at a startling pace. If it delivers even a fraction of what its backers promise, then today's insane spending will look cheap in hindsight. The bargain of the century. The honest truth, nobody knows yet. And that uncertainty is the entire story. So why should any of this matter to you, even if you never use AI? Because this is not some distant tech drama, it's your money. A huge share of the stock market's gains in recent years has come from just a handful of AI companies, which means if you own an index fund, or a pension, or a retirement account, you are almost certainly invested in this bet, probably without realizing it. If it's a bubble and it bursts, the damage won't stay politely inside Silicon Valley. It will hit ordinary people's savings and ripple through the whole economy. And if it pays off, it could power the next great era of growth. Either way, you're in the game. So, the smartest bet in history or the biggest bubble of all time? Watch three things: whether AI's actual revenue starts catching up to the spending, how much of the demand is real versus just money going in circles, and whether cheap models make the expensive ones unnecessary. Because the line between visionary and delusional is only ever obvious in hindsight. If this made the news make more sense, that is exactly what this channel is for. The money story behind the headlines. Subscribe, and we'll break down the next one together.